morning. Happy Friday.
Good morning.
Good
How
morning.
is
Morning.
Good
everybody on
morning.
this day?
Thank God it's Friday.
Woo-hoo.
Yep. Woo. Yes.
Good morning, gentlemen.
Good morning.
Next week will be a short week. We'll only have four meetings because the 4th of July will be celebrated on a federal level on the 3rd of July since it's on Saturday. So next
Ah,
Friday, we won't be here. So,
wow.
yeah,
A series of
we're not gonna have a 6-hour mid-year review and check up on all of our investments. Steve, I'm going to leave that up to you as our representative for that.
Oh, be careful what you wish for.
I know you do it.
Yeah, yeah, yeah.
Let's
The technician in me would be prepping and ready to go.
I know that's true. Let's get rolling here. Yesterday we closed. The Dow was up. This is yesterday's looks. The Nasdaq was down. S&P was down. Investors continue to move out of the tech names Thursday, causing Nasdaq Composite pull back 0.5%. While its first 4-day losing streak since February, the Dow Jones was slightly higher with a rotation into healthcare, financial, and institutional names, and you can see that. And we'll go to pre-market here, see where we are today, and you can see sell-off continues here today. But again, it's not how it opens, it's how it closes. But we're coming up on a weekend. There's just concerns out there. There's rotations. Again, the COPSI was down yesterday or last night. That's the stock market in South Korea. Basically, 50% is made up of Samsung and HY Unix. Investors remain wary of the rising cost of AI infrastructure, with the sell-off reverberating across global markets. And again, that wasn't my quote. That was a quote out of Yahoo Finance. And but I've been saying it for the last 4 weeks that there's something going on. Data centers are slowing down, and no matter what we think and how much hype we like and how much we think AI is the future, and it is, and Trent and I both agree on that, it is, but the path and the journey to get there can be a slow and rocky one and very unsteady. And I'm just bringing up interesting facts that are facts out there that are actually could slow this down, and the whole chain could slow down a little bit. So I'm not trying to be a downer. I'm just trying to be manage risk a little bit. What else we got? Moody's flagged data center construction is generating real credit risk for state and municipal governments. These data centers are coming in, taking up water, electricity, and the ratings of these municipalities is huge. They can't afford to lose their ratings because they do a lot on credits and on bonds, and if their ratings are down, they have to pay more for those bonds. So again, that's just another little crumb sitting on the ground that ties things together. That some of these data centers, well, in fact, majority of this year's are either delayed or canceled. So again, we're still rolling full production through our supply chain, and those things have to go somewhere. And the end result is it's going to a data center, and that data center has to be there. Let's see what else. Oh, on happy news, Iran had a drone attack on a Singaporean cargo ship yesterday outside of Oman. And some of the ships are turning around. The administration says the Hormuz Strait is open. So you can kind of figure that out on your own. But oil went down. So let's go take a look at oil here. Even though if they're attacking, oil's down. So 69 again. So again, that's pretty good. And we'll take a look at gold while we're here. Gold's up just a little. Gold and silver have been getting hammered. Our bonds unchanged. And then, of course, crypto. Bitcoin's down below 60,000, but it's been bouncing off 59. So we'll see if we can maintain that level. Of course, it's open 24/7 or go through the weekend also. Apple was down 6% yesterday. I'm going to talk about that. Microsoft was down 3% after announcing product price hikes. They blamed the increase on the cost of memory. So the whole AI structure has caused the price of memory to go up, which now the memory people have to compete with the AI people, or not the memory people, consumer products people like Apple and Microsoft have the Xbox, have to compete for that memory. And what they were paying before was just regular prices. Well, now the prices are inflated because of high demand due to AI. 85% margins just at Micron alone. And so they're going to have to raise the cost. And that cost is going to, I was watching yesterday and PCE came out, it's 3.6%, but that's peak because oil's coming down. Well, oil may be coming down, but the cost of everything else is going up because of AI and because of these chips. And I got a piece I put out uh, again this morning talking about that. Let me see if I can even find it. And it's about inflation and then costs up. This is where we're talking about AI and hyperscalers and all that, and they kind of sell to each other. And so we're not out there buying compute as consumers, but we are buying iPhones, we are buying iPads, we are buying Xboxes, and this is starting to going to hit. So if you turned on your financial news yesterday afternoon, the commentators were kind of wondering about Apple, sudden 6% plunge, and they were talking about framing Apple's price increases as an isolated corporate maneuver, or maybe an internal margin protection story, which it is. But what they don't tell you is that Apple just exposed the first major economic side effect of the AI arms race, and that's the systematic cannibalization of consumer tech components by enterprise AI data centers. For the last 2 years, Wall Street has cheered the massive multi-billion-dollar capital expenditure budgets of the hyperscalers. Investors treat it as a victimless boom, but what they didn't realize is the advanced memory fabs like Micron, SK Hynix, and Samsung have fixed capacities. And when a data center provider walks in, he's willing to pay massive premiums and then buy that capacity up for years and buy that bandwidth and high density enterprise silicon for a Blackwell rack. The foundries, reallocate that production lines away from low margin consumer electronics like the iPhone, like the Xbox. Apple's price hike is the opening salvo of a new inflationary wave, in my opinion. Then Microsoft caught the market off guard by declaring price increases across its Xbox hardware catalog. I think they're going to go up $100. And I think the Apples were going up between 100 and $300 per unit, which is a lot when you think about what's going on in consumer. You go look at what the consumer's doing and what their credit card balances are. The reason given by Microsoft was identical: skyrocketing input costs for intermediate computing silicon and memory components being sucked away by hyperscale AI expansion. Because the high-density DRAM, custom systems on chips, the SoCs, and advanced NAND flash storage are foundational building blocks shared by both enterprise servers and retail systems, the data center's crowding out effect is moving at a rapid clip. The enterprise data center trade is actively injecting structural inflation back into the hard goods sector across several broader categories, such as automotive. All your cars have chips. High-end smart TVs, they have chips. Security systems, and even your home appliance. You got smart, stoves and refrigerators that all have chips. They're all going to go up. What you're witnessing is a direct real-world cost of the AI capitalization expenditure bubble. When corporations spend hundreds of billions of dollars competing for the same limited pool of silicon and memory fabrication lines, the consumer ultimately gets left holding the bill, and the companies that rely on those consumers are forced to reset their expectations. And then you can check out the whole report. I put it out this morning on my office in the Discord. But again, I try to look out, as Kerry tries to look out in the future and see where stocks are going to be. I try to look out and I look for things that might be able to trip that up, or actual things. So these aren't fantasies. These are actually happening today. And you don't hear it on CNBC. You don't hear it on financial news until it's already happened. And then it becomes a story. So I'm trying to give us a little more advance on that, especially since, Kerry is so focused on AI. I want to make sure that we know what's happening, not just in the companies, but in the industry itself. Trent, what do you got? Anything on that to comment on?
I was thinking about it as I was getting ready for this call, and I was like, it's coming into July. You've got high school graduations now lead into freshman year at college. And it is so vital that you have a computer anymore for college. And many of those people who are putting their kids through school, or kids who are financing their way through school, or updating their computer needs. And because they need to keep up with today's demand on computer and compute, so they're buying new computers. And what they found out yesterday was the MacBook or iPad that they've so used throughout their high school career is now going to cost them 25% more. And that parent who's now looking at their child, they've raised this child to go to college to be better. And as a parent, you want to provide the most for them. You're now having to fork over or finance 25% more for a computer by Apple. And this will go through the PC market. This is all related to DRAM. And so I thought, holy crap, I can't imagine being faced with that. I think this is inflation, number one. We've been talking about it for 6 months. And now the demand for memory is coming to the surface and coming to the consumer. And Apple said, we can't absorb this anymore. I'm sorry, but you're going to have to pay for it. And those parents and those kids who are actually financing 100% of their education are now faced with this. 25% increase on an iPad. I know what they cost because I've bought probably a dozen of them. A MacBook. Now you're going to see, my daughter switched from a MacBook through SCAD a year and a half ago, and she switched to a PC because you get more power, and it was 50% less. This is going to impact Apple in a big way. It's going to impact Micron and all the memory companies. It's just finally cracking the ice, and it's coming to the surface. And this is going to continue. You cannot, they've got to pass on the cost, and the consumer is going to pay for it.
Or the consumer may not, like me. If I was thinking about upgrading, I might just keep my computer now for a couple more years and just hold off,
Well,
which will affect Apple's bottom line.
It's interesting you say that because I agree. Because Emma called me the other day and said, that clicking sound I heard that I was hearing in my fan? Well, my fan's broken. So I took it in. We're buying a new fan instead of a new computer.
I've installed a new fan on mine myself.
Yeah, well,
about a
her
year
problem
ago.
is it's a new computer and they don't have the fan available. So they had to order the fan.
Okay.
So that aside, she and her husband made the conscious decision to, instead of buying a new computer, because the new computer is 25% more now,
Yep.
even if it's a PC, and they're going to fix what they got. And I think you're going to see more and more of that.
You're not a good American. You're supposed to throw that computer in the trash and buy a new one.
Yeah.
Yeah, well, I think that's going to stop.
Good for you.
I know. Like I said, my fan went out. It was clicking, and I used to be at Compact Computer. I buy HPs now. I knew how to replace them because they trained us on how to build computers. Even if you're an executive, you had to go through the class. So I knew how to do it.
Yeah.
So
But
I just ordered the fan and put it in instead of buying the computer. But a lot of people don't do that, Trent. They just don't.
Because we have been trained
Yep.
to buy the newest and latest phone technology. Technology has gone from, upgraded. I remember putting more RAM or memory into my PCs.
Yeah.
Today, you just go buy a new computer. They were affordable at a point. Now they're getting unaffordable. And so, in my opinion, is you're going to find those companies who actually fix computers and provide parts for computers, because we're going to go back to fixing our computers because it's going to get way too expensive to buy them. I mean, a $3,000 MacBook is average price. You increase that 25% plus taxes. The average household can't afford it. The average new college student can't afford it. The average adult can't afford it.
Come on. We can afford it. Come on.
Okay.
Let's look at it in a positive way. We're making money. Let's focus on making money, guys.
Yeah.
Not how to save money.
Whose investments have tanked so much that they can't afford to buy and pay cash for a computer?
I don't think we're not talking about us, Steve. I'm talking about the general population of our country.
Our
Okay,
general
and
population.
how does that affect Apple's price? How does that affect all the prices of all the companies that you're investing in right now? That's
Well,
what I'm talking about.
you don't buy a computer until November when they do all the holiday sales. Buying any other time other than holidays is just crazy.
Well, and for people who think logically, like you, Steve, I think that's true. But there's a lot of people that don't think that way. Something happens, I need it right now. You know, I,
Well,
you know,
now
I,
there is that you know if you don't have any insurance or any other accidental handling and damage sort of stuff with it, and you take your Snap-on truck and you back up over your laptop, yeah, that's something. But
no, I
I,
mean, if it were me, let's say my computer went out during this thing, I'd have to go buy another one today, and I would do that. Okay, I could do that.
yeah,
Majority of people, if based on what we've showed you about the economy, how in debt people are in the economy, how 40% of the people making six figures live paycheck to paycheck, okay, and how a majority of the country has only $900 in savings. It's just not. The reality is the world that we live in is a good one for us, and that's because we think about these things. But the world that the majority of Americans live in is not. So that's why we bring it up. Anyway,
our dollars have names associated with them.
absolutely. All right, I'll move on. Amazon funding, they're still spending, lifting AI India cloud investment, 48 billion for Amazon. So still spending. You got Apple stock. We talked about that. MacBook, iPad price hikes, memory crunch. Core inflation rate hits 3.4% in May. It's the highest since October. And then everyone's like, well, fuel's going down, so it's going to go down. I don't think so. As Lee Corso used to say on ESPN, not so fast, my friend. I just showed you that we're going to see more inflation coming in consumer products now, not just fuel. So here you go. Core inflation expenditure price showed a 3.4% annual rate. The Fed's primary inflation gauge showed an annual rate of 4.1% annually, the highest since 2023. So again, for what it's worth, Apple stock drops 6%. They pass on AI-driven chips cost to consumers. We'll see if they pay that or not. They may. Here's how we ended up. We looked at that. Microsoft lists prices Xbox consoles due to soaring component cost. Again, these are things we need to know. If I'm investing in these companies and they're raising costs and then the demand goes down, that's going to hit my supply chain. It's going to hit my factory and it's going to hit my financials. So things you need to look at and think about. Maybe not today, but maybe in the future. Iran again attacking cargo vessels. Doesn't seem to matter anymore. I don't think we're ever going to get an agreement with these guys. I don't know. We're going to sign an agreement, then this happens. So anyway, it is what it is. We looked at the heat map yesterday. We had 46.8% advancers and 50% decliners, and you can see where we got hit. We got hit in the big hyperscalers, basically, in some of the insurance and banking areas. But the semiconductors, the money kept flowing in there yesterday. Okay. And I'll take a look at the charts. And, you go over to industrial. We're talking about here's Train, here's Caterpillar, Honeywell, Power, PWR, again, GEV, Eaton. So they're considered part of the AI trade. So the money went, back into kind of the AI trade on the S&P 500. We look at the NASDAQ. NASDAQ was down 118 points. And again, you see semiconductor material equipment and semiconductors are green. The guys paying for it are red. That's where the money flew out of. And some of the industrials, again, AI related. S&P 500 right down on the 50 for 3 days in a row. Eventually you keep jumping on the ice, it's going to break through. We're trying to see if we can get above the higher high. If we got the higher high, low, higher high, then we got a lower low, lower low, and we didn't get the higher high yet. Not that we're there yet, but I'm seeing this pattern. And this pattern usually resembles a reversal. If you remember, we looked back, oh God, it was back in 6, 7, 8 months ago, we started to see this dome form, and that's what I'm starting to see again on the S&P. So not that it's going to happen, but there's a probability if we don't get higher highs that that's going to happen. Same with the NASDAQ. Here we have our high. Here was our higher low, and we closed below it. We still couldn't get the high. We were up, came back down, tried yesterday to get up, and couldn't do it either. You look at the Dow Jones. Dow Jones has been bouncing off its high, but we haven't got back to it and closed over it, basically, even in the Dow. IWM, small Russell, small caps. There's a lot of little tech companies in there. You're seeing that go up. So, some value over there in IWM if you want to go through 2,000 stocks and try to find that, or you just get in the indice, and follow that also. The RSP still not back above our resistance level. On the RSP, we did wick up and back down we go. The MAG's just dying. Okay, these are the hyperscalers. This is where the money's coming from, and they're starting to get punished for it on their stocks. Right down to this pretty good level of support and resistance. You see it hit, got above it, finally made it above, and here we are. We break below that. That's not good. When you see we're in a downward trend on these MAGs 7s, and again, if it weren't for some of the stocks in the memory side, our S&P would be down and not streaming up every day. NVIDIA, again, NVIDIA is a chip company supposedly, but it's not participating in the party that Micron is because the money is going to Micron. So you think about this, I'm Micron or Hynix or whatever, I'm supplying NVIDIA with these memory chips. Well, I've got 85% margins, and NVIDIA is paying for that too. So they're going to have passed that on to the hyperscalers. They're not going to be that happy. We've already looked at how the hyperscalers are handling it. They're going out, they're researching their own chips, their own designs, their own partnerships, Broadcom and all that. We talk about it all the time. So again, I'm not seeing any happiness right now in NVIDIA, and we're coming down to the 200, okay, in NVIDIA. Amazon just dumped under the 200. We bounced on it 3 times. You jump on the ice enough, you're going to break through, and that's what happened. So here we are, another hyperscaler in the AI business, funding the AI business, is now in a bearish mode, technically underneath the 200. Apple, look at the big dump there. They, raise prices. Okay, when you raise prices, are people going to go buy them? Is your margin going to be hit? And that's the chance you take. And again, they decided we're gonna swap margin for maybe customers, and here we go. So we're coming down on the 200 on Apple. Google's not as bad as the rest, but we're still seeing that downward trend, and we are getting close to the 200, and that's where you're going to see some buy orders just a little bit above it, at least today. We're under the 50, we're under the 9, we're under the 20. It's still downward trending on Google, spending more money out there, and the oscillators look bad. And Tesla almost down to a support level inside the Bollinger Band, but again, you're seeing it just down and to the right. Meta blow right through it. It didn't blow through, but dipped underneath its support level. We'll see if it bounces back up. But the 9, the 20, the 50, and even the 200 are heading down on Meta again. Hyperscaler out there spending money. I don't really know what Zuckerberg's strategy is, and maybe that shows in his stock price. But here we are. It's the AI boom. These guys are spending it. And how much longer are they going to spend it? How much longer is the Meta shareholders or the Amazon going to continue to watch this head off while you see your supplier's stock go the other direction? Microsoft, I'm just like, what is going on with Microsoft? Again, below the intermediate support level, and look at that Bollinger Band just screaming down. And we did hit where there's some buy orders there. I don't know how many, but it was a little bit at that level, 347-ish. We'll see, but man, that is as much as you see Micron go up, you're seeing this one go down, just the opposite. And again, these are the guys paying for it. And I'm sitting there in the boardroom in Microsoft or Amazon and Google going, okay, when am I going to start seeing my stock price go back up? Because we're paying all these guys and theirs going up, and they're screwing me by 85%. Okay, because that's what their margins are, and they see that, and they're going to remember that. Netflix, just again down, consumer stock. You talk about, consumers, and we'll just go out and buy a new computer. Well, why is Netflix going down? Are they losing subscribers? Or people saying I can't afford Netflix? I don't know. I'd have to look into it. But again, stock keeps going down. And again, you would think the Netflix would be a thing if you're short on money, maybe this would be your entertainment. Instead of going out to pizza, you have Netflix and cook up a Tony's pizza instead. Palantir, yeah, I would hate to be a Palantir investor right now. And it's just down and it's just not stopping. SpaceX, if you were in SpaceX, you bought at 150, you're good. You're $3 up as of yesterday's close. But if you bought at anything above 153, you're now down on this. And I think Sam Altman came out, and I think they're going to delay the OpenAI IPO to later, maybe earlier next year. And some of the things he blamed it on was what happened to SpaceX. And again, there's only so much money out there that we can transfer out of Bitcoin or gold or whatever, put in an account and go chase SpaceX or chase Micron or whatever. And that's what we're seeing, that, it's the liquidation of the market, it goes, but there's only so much water in the bowl and it has to go somewhere. And when it goes somewhere, it comes out of somewhere. And so it's coming out of SpaceX back into probably, at least yesterday, some of the memory. Here's your SMH. Okay, that was up about 3% yesterday. It's a semiconductor index. But if you notice, we're kind of doing that rollover thing. And I want to see if that happens. S&P is 50% of the S&P is AI related stocks and technology now. So when this starts to look like this, and these are 17, 18% of your market cap now, you're going to see the S&P look just like this. And so it's up, but we're still hitting resistance on the SMA. So where did the money go? It went into semiconductors yesterday, went into Micron, up almost 16%, right up on resistance. It went into SanDisk. SanDisk, I think, is up 5,000% in a year. I think I saw that this morning on one of the financials. And my God, if you have 5,000% and you're still riding out the full way, I couldn't do that.
Check
anyway,
yourself.
it's up. Yeah, it's up 22%. Okay, on SanDisk just yesterday. KLA, CLAC up 7.62%. This is where the money went yesterday. Applied Materials today, these are all down, but look where they're at. They're right on a resistance level. This went up almost 14%. Lam Research, 7.21%. Now went up right to resistance. Wick back down below the 9, and it came back up. And again, watch your oscillators. But this is where the money's at. And until it's not, this is where it's at. Here's AMD. But look at this. I'm starting to see that kind of the dome kind of move over. But again, it was up almost 3%. AMD. Vistra, up 3%. Trying to get past that 200. If it gets past that 200, you might be interested in an investment. Go and check out your fundamentals and know what you own on that one. Taiwan Semi, this was down. Okay, so money didn't go into some things in the sector, and Taiwan Semi was one of it. It was down 1.32%. Broadcom was down. Okay, about a little under a point. ASML, manufacturer, down. Or it was actually up 4.45%, but right up on the 9, which is turning over. We've seen this before. The 9 rolls up on resistance and comes back down. Right on that and right on resistance. And the oscillators have crossed negative on ASML. XLI had a good day because of the AI trade. Again, money flew back into that. It was up 2.17% in the industrials. And why? Well, you got GEV. GEV was up over 2.5%, but we're still fighting this resistance level here. So if you're thinking of chasing up, always look and see what your resistance is, and then check out your oscillators, see what they're telling you, and then make a decision based on your plan. Caterpillar. Okay, Caterpillar's up 6.33%, 1,057 for Caterpillar. Okay, so again, we're here at resistance. We can break through resistance, but a lot of times, we have to come back and retest that and see if it's going to roll up anymore. But that Caterpillar's been a good play. Is it something you want to get in right now? It really depends on your trading plan. Here's Parker Hannifin. Again, industrials, nice run on this, between the 9 and the Bollinger Band. But again, we've come up here, we've tipped down here before. And again, it just tells me, well, it's a higher risk trade if you get in at this point than it was down at this point at the 200. And that's technicals tell you. CSX, even the railroads are coming in on this, but again, right up to where the highs were on the CSX. So money did rotate around. Here's a regional banking has been good in the last 4 days. You see that's been up. Again, not all the big banks, but some of the regionals, but again, right on a kind of a resistance level. Home building. Look at this. I mean, we're all the way back and just up, up, up. Interest rates are probably going to go up. KB Homes came out the other day and had a good earnings report. But again, I start seeing these topping tails, and that gives me an indication. So I look at these, I'm like, man, that is a good run. Do you think that this is a good spot to enter? I mean, that's what you got to think personally for your own risk management. I look at that and I say, I like my money too much. I'd rather set it for 30 days at 4.15%, which is what I got today, and just wait and see what happens. I don't want to go up here, get a topping tail, and then dump it down, which is highly possible, highly probable. Here's jets, airlines of all things. Okay, airlines are going up probably because jet fuel's supposedly coming down. But again, you go look at Delta, go look at American, go look at United. XBI, we've been talking about biotech. I brought this up on Monday. Biotech continues to go. So again, there are areas out there. And I mean, this might as well be Micron, the way it's looking on biotech here. But money's just flowing around. You got a lot of money out there flowing. Here's building and construction, PKB. You look at these and you can go into any one of these indexes and see what their main holdings are. Check out those stocks. Within healthcare, I brought this up on Monday, SYK. Okay, got above the 50 and still rolling up. So these are the kinds that I like to watch for. They get a right along support, and then they start rolling up, get above that 50, hit that 9 crossing over, watch your oscillators. That's where you have, some runway on some of these. I like these actually better than I like trying to chase momentum. That's just me. Abbott Labs, finally. We've been watching Abbott. Abbott got above the 50, up above the Bollinger Band. Got some crossovers here on the oscillators. So Abbott's finally showing a little bit because the sector, the healthcare sector is defensive, and that's where money rolls. KDP of all things caught Dr. Pepper. Nice run on Dr. Pepper, came back down, got some resistance above it. But there are things out there you can just go and take a look outside of AI. There's money flows to where the value is. Go in and look at Bitcoin. Poor Bitcoin, man. But it's still holding in there. Here's our $60,000 level, and we've come down and we've kind of trying to move sideways. We're still below the 9-day. We had a nice run up, and if you look at it, this is a bear flag. You come down the pole, you come up within this channel, and when you break that channel, it's probably going to go down. It tried to come back up, but didn't, and that's where it went down. So in this case, the bear flag symbol worked. We look at other things that are out there. More defensive stuff that you might want to consider. Here's ConAgra. Came down, we watch it. You look at it go up. ConAgra's at 13.78. They pay a dividend of 35 cents. Okay, so I mean you're getting a pretty good dividend on a ConAgra brand, been around for 100 years. I mean, it just depends on what kind of investor. If you chase growth, this is definitely not a growth stock. Other things out there, GIS, the General Mills. You're starting to see these charts look like this. Okay, so money is flowing back in to some of these boring companies that have dividends, which is safety. KHC, Kraft Heinz. Again, I don't like these topping tails, but here we are. You can see money has been flowing there into defensives. Let's just look at United Airlines. There you go. Would I buy it outside of the Bollinger Band? No. Let's look at Delta Airlines. Same thing. So I guess, there are opportunities everywhere. It depends on your plan. It depends on your risk. Risk management, I look at AI. And saying AI sector right now is just memory, and it's going to be very volatile. And if you haven't caught the ship yet on some of this, it might, the risk factor is higher to jump in on them now. Okay. And part of the reason it's high is because of the supply chain and the way the supply chain's working. It's because of data centers. Data centers need to be there for all this stuff to be at to actually work. And if the data centers aren't there, it's going to start piling up inventory, and they're going to start slowing orders or canceling orders all the way back down, is my opinion of how I see this working. So I just want you to risk manage. Know there's other things out there you can be investing in, and there's different levels of risk out there. Trent.
All right. Let's take a look at a couple things. All right, so this is the VIX. I was asked to review this yesterday, so I want to make sure I cover it today because this is an important indicator of S&P's overall risk appetite. As just a quick review, when we look at the different levels, investable bucket, we've been in there for quite a while, back into April when the market bottomed out. We're now, the last 2 days, that's really 4 days, we've been pushing up against into the chop bucket. And this is when volatility expands. This is when you get hyper moves higher, like we saw in Micron yesterday, or hyper moves lower, as we've seen in the past weeks or so. But now we're entering that chop bucket, and this is where you just get that real high volume bounce. And then the F bucket, well, this is when things really start to going south. And we saw that bottoming back in March. And that's where we saw volatility sort of slowly dissipate into the investable bucket. And that's why we've seen that move from bottoming in April to the highs here recently. So volatility is on the move, and it's something to keep an eye on. This is where you tighten your stops, maybe. You keep an eye on very high volatility sectors as well. So let's look at where has money been flowing here recently. And I'm going to use the ETF sectors as the places where money is starting to flow. The XLV, which is the healthcare sector, we've seen a move higher there yesterday. Pretty big day volume-wise. Well, average volume-wise, but a big candle move. We're going to see it move open higher today. So those underlying healthcare companies are becoming more attractive because their valuations are more reasonable. And in a environment where you move from a stagflation or a hawkish or a growth environment to stagflation to a hinting at recessionary environment, you see a movement to more conservative areas like healthcare in this case. So we're seeing a move there. IEF, which is the 7 to 10 year US Treasury yields, those are starting to make a move higher, still below that 200, up against resistance in the option market at 95. But as we see yields come down in bonds, you're going to see values go up. Now, TLT is not feeling that the same effect, but the shorter term bonds are starting to see yields fall, which means the underlying ETF that goes the opposite way. Because remember, when yields go up, bond values go down, and when yields go down, bond values go up. So we're seeing a hint there, very tiny hint, to be honest with you. XLB, which is the material sector, we've seen it gone basically sideways above the 200, above the 62. Now above the 15 is starting to move higher. We're going to see it open up just a little bit higher, but we're possibly going to see resistance here. But if we see a breakout, say over, let's just say $53, $54 or $53.50, there's a good chance we're going to see money move in that direction. It's an opportunity potentially. Just keep an eye on it for a breakout. For if you're looking for a short-term trade, that could be an opportunity. XLP, which is consumer staples, been going sideways for quite a while. You're above the 200, you're above the 62, you're above the 15, and you're up against resistance because the option market is pricing 85 as a ceiling and 83 as a support. But as long as if we see a break above 85, we could see a move higher and get back up towards that 86, 88 range. Are these big moves? No, but you can look at the underlying investments in them and see where the money is flowing, because these are market cap weighted companies. So that gives you possible opportunities within these to capitalize on, I would say, more of a short-term mindset, 15 to 62 to, less than 62-day periods. So following those, making sure these companies are moving above that 200, or these sectors are moving above the 200, moving above the 50, and definitely moving above the 200 or 62 period, in my opinion, could be opportunities that we could see in the near future. XLU, which is utilities, we're seeing similar behavior. It's getting money is moving there, but there is resistance on XLU at 46. But a break above that would be, hey, I'm going to a less risky dividend paying sector in this case, and more stable kind of environment versus a high beta environment like technology. And then let's see, XLRE. This is real estate. This is interesting to me because everybody's saying real estate, and I think it's more residential, is looking more concerning because of higher interest rates, potential of a rate hike, which would put pressure on the bond market and see yields go higher, mortgage rates go higher as well. But we're seeing XLE has been basically above the 200, above my intermediate trend line and trade trend line, and we're starting to move inch higher. Is this a big trade? No, it isn't, but it's more of a safety, where is the money flowing opportunity. You can open up the hood on XLRE and see what the top positions are. Go then and analyze those in the stock scorecard and get some insight there, and look at the behavior from a trade from a technical standpoint by looking at the charts. But also you could use the 1880 quant analyzer to confirm trends in that kind of thing. So that is one. And then I just want to hit upon this. I've been in this for a while now, and it's Regions Bank. And I bought it down here around the 200 period moving average. And we're now up around 30. We're going to open up at $30. We're coming up into some resistance levels that we've seen back here in February. But if we see a move higher, we could see Regions Bank move higher. But this is part of that regional bank sector to take a look at. I think the market is the regional bank ETF KRE.
Yeah, we looked at it, KRE. We looked at it just a while ago.
Yeah. So looking at the individual holdings in it could be an opportunity sign. So it's interesting just how markets move in cycles. I've talked about the phase level. Based on my phase indicator, we're moving from a stagflation environment to more of a recessionary environment. And I think we're starting to see that little indications of that from a consumer product standpoint with Apple and some of these others. So where is that money going? Where is the defensive names going to go and give you opportunity to make money as we see this rotation in the phases play out? I honestly think I was looking back at history. I forget the guy's name, but he was an interview. He's an older guy. Was it Graham? What's his name? Not Alexander Graham Bell.
That
anyways,
would be an older guy. That would be an
that
older
would
guy.
be an older
Was
guy.
he talking about telephones?
No, but he's a famous investor, and he's on a podcast. I'll find the podcast and post it in my office in the Discord. But he was talking about, if you go back and look at the biggest technology explosions that have changed our world, all the way back to the railroad, the build out of the railroad in the was 1873 panic, and how much money flowed into government funding for railroad build out, as well as companies and bonds that went into them, and then the excitement and hype around raising that money to build out our railroad system eventually then corrected itself or crashed. And then you saw those companies, some of those big financiers of the railroad build out, actually, go out of business. But then it recovered. And we saw that with the internet boom bust, and how so much money during the 90s and late 80s, early 90s went into the internet boom bust, and how that euphoric excitement around it was just incredible. I remember living in Boulder, Colorado, and just the internet boom, and working for a software company at the time, and just the excitement over this expansion. And then it crashed. Amazon lost, I believe, 92% at one point. But then after the rubble sort of settled and all the dust settled, then you had what we now know as the internet, the companies that became, the foundation of what we know as the internet today. Amazon recovered. Now it's one of the biggest companies in the world. Microsoft recovered, so on. And now we're at a time and frame where we're once again, we have a technology that is changing our world, and it's changing everybody's world indirectly or directly. And we have seen this hype cycle, which has actually been really short in comparison to the internet boom bust and the railroad boom bust. Um, yes, I think that it's Benjamin Graham. Um, and
Oh,
it's been
that's Buffett's guy.
huh?
That's Buffett's guy,
Yeah.
Benjamin Graham. Yeah.
So it's shortened. It's very short and it's very concentrated. But as Ken Griffin said at the World Investment Forum or whatever about 3 or 4 months ago, he said the only way you get this kind of life-changing technology on the table is to overhype it because you got to raise so much money to build it out. He said, but after every hype, there is a correction, a crash. Is it going to be long and drawn out like Buffett thinks you're going to have markets going sideways for 10 years? Or is it going to be quick? I don't know. But I do recognize we as humans, and here's the thing. AI is one thing. It's changing everything. But human beings are the same. We are not changing behaviorally. And we will never change behaviorally. And that's why we're in this peak of this AI build out cycle. And that's where I look at where is the low risk opportunities in this peak? And we're seeing it. Mark points out the charts for a long time. We're at this peak. We're hitting these roofs. Now we're in this cycle of, oh, wait a second. This is going to cost more than we expected. And we're seeing a beginnings of a correction. So look for the opportunities that have been ignored, that sectors that have been ignored, that are on the low end, that are really value opportunities, and look at dribbling into those opportunities as we move in this, from one phase to another. And so really, I want to just emphasize, even though Kerry and I get into it and he believes this will never end, he gave me some of the best advice I've ever been given. And that is everything comes to an end at some point. And I think about that and I'm like, everything comes to an end at some point. Huh? Good or bad, positive or negative. In my opinion, there's going to be some incredible buying opportunities in the next 6 months. And I want to be there. I want to capitalize on it because I believe once we get through once we get to those buying opportunities, the upside is going to be incredible. And it's going to be so much faster than the internet recovery, which took 10 years. It's going to be so much faster than the railroad recovery. And people are going to make tons of money as long as you have money to use to make it. And that is my positive message, Angelo. That is what I think there's great opportunity.
I love that trend. I love it.
I really am. I mean, honestly, I hate to see people get hurt. I hate to see the forest get burnt. But once you clear the rubbish, you allow the strong and the diverse, and I mentioned it yesterday, I hit upon this. Look at those companies have diversified income sources, such as Microsoft, such as Amazon, such as Google. Those will be the trees that survive the fire. And those will come down in price and present incredible opportunities for you to capitalize on. And look at those the makeup of those kind of companies and look for other opportunities as well. Because I don't know. I'm just excited about it.
We just need to keep some dry powder on the sideline.
Yeah,
I think
exactly.
That's a good idea, and that's why I said I bought some 30-day CDs today, 4.15%. You can't beat that per annum. Is that cost of money and risk factor? And as interest rates go up and bond yields go up, stocks are going to start competing with these bonds for money because you get up to the 5% level, and that's considered pretty good. When you consider on average stock markets are 7-8%, that's the risk reward relationship is a lot of people would go take that easy 5% and sleep at night, as opposed to go and try to figure out what's going on here. So yeah, dry powder is always a thing, and that's, for me, I'm not going to chase all the way up if I'm not in a position already, and I'm not going to chase it up, Angelo, right now. I mean, there's other stocks out there. We've been showing them here, that can work, and I think Angelo, you've given me a couple here. Let me look at. Are you done, Trent?
Yeah, go right ahead.
Okay, Angelo gave a couple, and I never thought of this one. Angelo brought this up. VRNS. Now, I don't know what they do, but I do know they don't make any money, because here's their earnings: negative 32%, negative 24%, and then you come up here and it's negative 26%, and it had a huge gap drop on that
Got
one.
an upgrade a few days ago. Price target 45 from 33.
Okay.
And I mean, they have $660 million sales.
But they still don't make any money, right?
Still don't make any money. But
Right, so-
next year, earning per share is supposed to be 222% increase.
Okay. What did they
I don't
do?
know, but the P is 101, so I don't know.
Yeah. What did they do, Angelo?
Hey, let me read you a little bit.
Here's what I
Engages
look
in
at.
provision of security software platform.
Software.
Software enables enterprises and industries to protect data stored in the
Okay.
cloud.
Okay.
So
I'm looking at
it
this
looks
chart.
America, Europe, Middle East, Africa, everywhere. Soros, not that I like him, but Soros has a 57% position in here.
Okay.
I don't know if he's good or bad.
So, well, that means he has a lot of money in it. So hopefully he got it down here and not up here. Because they're
No,
back in
I'm trying to get in.
No, I'm just looking at, back in October of 25, it was at $63, and now we're sitting at 38. What I do like about it is that it got above the 200, and we're still following that Bollinger Band up. I want to get that 9 and everything rolling. I want to watch these oscillators and keep those rolling up. You got some room to go, but here's your technical issue right here.
Right.
You come back here where it dropped, and that's where we are right now. So there's another resistance area, right? 40, 79-ish. And if you can get past that, then you've got some room to roll. Okay, a little bit. Let me go back a little further. Yeah. So see, you've got some room to roll here. And you'll have different resistance levels, as you can see. So you get past that one. Your next one's right about there. And your next one's right about here. And then we come up to about there. Okay. So you got some room in real estate on the upside if we can get past this right here. I like that it's past the 200. Okay. That's a good sign. It hasn't been there in a while. But again, we got to get right past this level right here. If you do that and come back and retest it, that's usually a pretty good sign. It'll probability wise. And again, news has done a lot of crap and damage, but yeah, I like this.
You're saying it's better if I retest the 200 before it goes back up?
Well, it's actually, we've gone above it 200. 200 would be a support level now, along with the 9. You see the 9 is going to cross. So right about there at 34.80 would be a support level now, because we've come up above it now 3 days. It's kind of looked like it went above it, came up. It could come back and test. What I'm saying is I'm more worried about this 40.40 right here. You can get past that because look, we've touched it here. We've touched it here. And why? Because that's where we dropped down to when we started. It wicked up. So that's your level. You get past that. I want to make sure you retest that and then see if you can go.
Okay,
Does that make sense? Does that make sense?
Yes, absolutely. Thank you.
Okay.
Thank
All right,
Hey,
you got another one. Yeah.
Mark, real quick. When I look at this on the scorecard and I look at the behavioral fair value of this, we're in that fair value range for this company between 32.50 and 44.80, with a price tag of right now 38.56. So we're actually in an environment where this is actually fairly valued. And so you could get definitely a move higher, but like you have there, that resistance level at $40, really the high end of this fair value range is about 44. So I guess when I look at this, I go, okay, when you look at this valuation of company from a fair value standpoint, you're basically in the zone for this company. And I think that's why you saw that major drop back in November of last year, because it became out of, it was not fairly valued. The earnings came back negative. And so it's reset. So you're in a fair value zone. So it's what's got to happen for this stock to go have a higher fair value to be really undervalued. And its chances are you got to see earnings per share growth, which is neutral right now. You got to see increase in cash flow. Your balance sheet has to strengthen and your profitability has to strengthen. I think those are kind of things I would look for the fundamentals to translate into a higher fair value price for this. So something to ponder as you think about entering this company.
Yeah,
keep an eye on it.
We'll watch that one, Angela, and see what happens. But it does have to get past this level technically for me to think about it. So, all right, we got another one here. Blaze. This is another one from Angela. This one's a little out of my comfort zone now. Okay, look at this. You had a boom up, sideways consolidation, and then a boom up, and then you've got a topping tail pretty much here, which usually means to me it's going to turn around a little bit. So we've already
It's associated with core weave and all part of the storage affair.
Okay, well that's why. So let me see up here. Yeah, okay. So we did come up and we hit where the sellers are right there, and we do have a nice. You can see what happened. We had topping tail, and then we closed below, and now actually we just opened right here below, but we'll see if it comes back inside the Bollinger Band. Does this company do they make any money? I'm looking for my earnings. I don't see any earnings yet.
Earnings on March 26th.
Getting better and better. They're minus 39 cents.
Okay.
But
revenue was up 2.34% as well. So moving in the right direction.
Couple upgrades, call it for 16. And
now you got to remember on these upgrades, Angelo, that and I've been there. Okay, so I'm an analyst, and I work for Trent Grinkmeyer's trading company, and Trent has me in an office in this hallway, and across the hallway is Trent Grinkmeyer's traders, and I'm his analyst. And the traders at lunch say, you know what, we're really going to get into BLZE. Can you help us out? Sure. So I go back to mine. I say, you know what? I'm going to upgrade this to 16 because Trent got in at 10. Trent's traders got in at 10, and that happens a lot. So don't think that it doesn't. That's why I don't trust analysts. Okay. I think the best analyst is us. I mean, not me, all of us together, No,
I got you.
Yeah. Now, when an analyst comes out and says something, it's going to move the market. The algorithms kick in, they buy, people chase, and now look where, here chase up. I don't know where that happened, probably right here, I would imagine. And here we are coming back in beside this candle. So just be careful about analysts. And I put out a bunch of papers a long time ago about analysts and how they operate. Okay. All right. We'll go do a couple more here. Someone else. Robert wanted to look at Bloom Energy. It's always a popular one. Bloom Energy. Okay. So again, Bloom Energy came up. Here you had a topping tail. We closed below that topping tail. Okay. We couldn't close above it. We tried. We opened it up right about at it. And now we're back down. So you're seeing under the 9, under the 20. Now we're fighting on Bloom, and you're seeing the oscillators roll down. So your next level on the downside for support is going to be this 50. The 50 is about 272.93, and we'll see if that bounces. We bounced before off that. Okay. We'll see what's going to happen, but it looks like it's down about 6% today, and you're going to see a lot of these guys down today. Robert wants Nibius, NVIS. And Trent, jump in on any of your comments here. So Nibius, okay, you're going to see again the AI trade. Look at this. I mean, we came right up. Here's your topping tail. We came back, tried to open above it, closed below it. Tried to open above it, closed below it again. 2 times. Okay, so these topping tails tell me when this is it, it means, man, the price ran up, it got beat back down, and then the next day you want to see if it'll happen again, and it didn't. Okay, so here we are. Now we're under the 20 on Nibius. You got crossovers on the negative side. So these are nice runs. Okay, but right now I'd wait for it to come back in if you're going to trade it. If you're already in it, let's say you got in back here, 107.45, it's 240. I mean, it really comes down to, what your risk management is and how much profit you want to take, and never hurts. I have a micro strategy, and I sold out of some micro strategy when it hit 100 because my cost basis was lower than that, and I didn't want to lose anymore. So I took half my position and got out. I'm going to let the rest come down to another level. If it hits that level, then I'm out on that. So I keep my profits on that, and I think that's the way you have to learn to think about these things. That they're, like Trent said, and his dad once said, nothing lasts forever. Okay, and even these costs, they don't. Go look back at the old charts of Amazon and all those guys and see what happens. But go look at the cars one that we always look at. So anyway, I would wait on this one.
On that one, you're on the 15-day trading range. You're at the bottom half of the range. Your bottom end is 234. Your top end is 282. So we're at the bottom 21% of that range. Volume is not, it's thin and unconfirmed. So that's something to take into account there. Any bounce is suspect until volume recovers above 1. Analogs are anonymously bullish, average 28% over the 20 bars, but fractal chaos and blow-off extensions override analog optimism. So it's one to definitely not. I would wait for a pullback, and I think you're starting to see that today or over the last couple of days, and better opportunity to enter in this in a better range.
And that's technical. And you look here in 11/11/25, negative 55 cents in earnings. Here's your earnings on February, negative $1.24. Here's your earnings in May, 201. So they finally went profitable there. So that's a good point there. So that's at least a decent thing. I don't know how they did it or what they did or whatever. But again, here we are. We're up, have a nice run up. Nothing lasts forever, but we'll see what happens.
Yeah. They're a data center company, so their margins are probably increasing because they have to increase their prices because the cost, and because there's such demand for data compute, they're able to ask a premium, and they're probably getting it. So remember that trickle down effect as well can also play out here as well.
Yep.
So
thanks for that. Yep. Thanks for that. And Bobby, thanks for that. You wanted to look at Intel also. Take a look at Intel. I'll just keep it on the 2-year chart. Intel, look at this. Government gets in, shoots up, negative 73 cents per share on the last earnings report, negative 12. So again, a lot of hype in here on that. And let's get a little closer. See right up on resistance. Here we are. The 9's rolling over. Now we're below the 9. Tried to get up above our high, came back down lower. Just keep looking for higher highs and lower lows. And again, so I'm just seeing a lot of, with the oscillators, a lot of maybe flattening out on these. They might go up and down a lot like we've seen. But again, I see this resistance quite a bit, and then we've got sell orders right above. So Intel, you've had a nice run if you've had it consolidated, and we'll see what happens with Intel. But right now, you just got to ask yourself, is this somewhere that I'd want to get in at this point with my money? Remember, it's your money. You can win it back or you can lose it all. And you just got to know what your plan is. And Trent and I always say, have a trading plan that meets your risk tolerance. I have mine that's documented for trading in the Discord, and this would not be something that would cause me in my trading plan to say, yeah, I'm going to buy Intel today. Okay.
Yeah. It's, from my point of view, it's got, on the 15-day period, it's got a lower range of 114. That would be a better opportunity to buy a trade in this. But the 62, my 62 period's more at $98. And at that point, I think that is probably more realistic, in my opinion, of where this is headed, especially with what we're seeing roll out here recently. But you may get opportunity at 114 for a pop higher. In today's range would be if you could buy it in the 114 to 120 range. That would be on the lower end of the range for today. It's got a high end of 144, so we're more closer to 144. And so at this point, I think it'll pull back on a more of a 15 period average. But remember what sector it's in. Remember consider what's happening right now. What we're seeing, the risk off kind of trade is starting to happen again.
Yep.
Yep.
TWO. Someone want to look, or TMO. Sorry. TMO. Sorry. TMO. Thermo Fisher. Okay, here's a kind of I believe, a healthcare kind of situation. Here we go up for Bollinger Band, and you got some sell orders right about 519.61, and then you got the 200 as another band of resistance. We've seen that before. I'm going to roll back the year, take a look at it. Right, you can see why it's resistance right here. Boom, 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 and we got above it and then broke down below it. So that'll be a pretty good level at 519.61. You're getting close to it. So your reward is up to 519.61, and your resistance is down here to the 20 at 479. So that's your risk side on that. Trent, anything?
It's way out of its range. Better opportunity down around 460, 470 range, which is a ways down. So it's just right now very speculative. It's below that 200. That's like the line in the sand for me. So it's got to break through that to change the overall direction of where it's going.
Yeah, it's had trouble there. So we'll see. Yeah.
Yeah.
Zillow. What's the symbol for Zillows? You just wrote Zillow. I don't know.
Is it Z?
Is it Z? That's Zscaler, isn't it? Oh, Zillow. Oh, there's Zillow. You're right. Oh, look at Zillow.
Whoa.
Well, there's opportunity if it starts moving the other direction. You can see we've had this level of resistance where it did go sideways. Then we got earnings, 19 cents a share. And here we are. We're even down. Let me get a little closer so you guys can see. Oh, we're still under the 9, still under the 20, still under the 50. Bollinger Bands are diverging in a negative sense for us. I'm going to move this because it's already blown past that. Then we'll go below and apply. So we got some buy orders somewhere around 28.45. We're at 30.15 now, so a little bit down on that. And then the next level is 27.06. So that's where you got some buy orders. We'll see, but I would wait, get this thing to roll, get above that 9, and see if it rolls back up. But it's not looking like it wants to right now. Oscillators are dead to flat. So I'd wait on Zillow, but again, right now, no, it wouldn't be anything I'd want to. But I'd put it on a watch list for sure.
Yeah.
Okay. Woo.
All right.
Dave, thanks for being our analytical guy. Every time we look at something, he puts all the numbers up in the chat. So thanks for doing that.
All right.
Welcome.
Yeah, he's also.
I mean, I've got it all bookmarked, so it's not that rough.
That's cool. But I like that you do that because people can go see some of the other what it does and some of the numbers. That's awesome. Thank you.
Well, it's just my way of also taking notes during all of this. I figure if I'm going to sit in on it and do stuff, I might as well take paper notes and other notes and be able to look up stuff and make it easier for myself.
Nope, I appreciate it. Is that it? Zeke, do you have anything? I haven't heard from Zeke. Zeke's there. He must.
No, not really. I'm
Okay.
I'm still sitting here thinking there's at least one other American that fixes stuff, and that's well, that's encouraging.
Yeah.
A short story. I have more money know what to do with. No, I'm not bragging. I'm just saying that.
Can I send you one of my bank accounts if you don't know what to do with it? I need a vacation, Zeke.
Well, I have some ex-wives and they claim they know what to do with it. So you have to wait in line. But
Okay, well, that
Always
means
and forever.
I'm never going to see it.
yeah, yeah, exactly. I would have no problem going out and buying 3 pickup trucks. I'd still have more money when I know what to do with. But instead, I don't do that. I have two 2004 cars. One of them is a Honda. And recently, one of them blew a head gasket. $4,000 to replace the head gasket. No, it's not $4,000. It's $700 in parts and a few hours work on my part. And I'm 81 years old. I'm getting so I can hardly walk. But I just decided I wasn't going to farm it out to the local garage. It's just another story similar to Trent's, and this is a ridiculous statement, but I'm going to make it anyway. If Americans would learn to do this stuff for themselves, they would get a greater satisfaction when the job is done. Their bank account would be bigger than what it is now, and they'd be a lot happier, like all of those people in Italy that Angelo talks about.
Yeah. Yeah, I
Yeah.
think my personal vehicle is an F-150. It's a 2009, and I keep older cars because I can work on them. And Jan has an 18 Escape. And I open the hood, and it's just a big plastic piece on it. To change the battery, I got to take the wipers off. I mean, it's like it's ridiculous.
Exactly.
Yeah,
Yeah.
I get it. I
Like
get it.
The Chinese people save 60 cents to the dollar on average.
Wow. Really? That's crazy. I mean, you
What
think
kind?
about that. We don't teach how to fix things anymore.
No, we throw them away, buy new ones. That's what we just talked about on computers.
Yeah. I think if we just get back to, we stopped in Louisiana to say hey to Ginger's brother, and their AC has gone bad, and it's all because of the box where you program it. And I walked over and looked at it. I was like, "Have you changed the battery?" He looked at me and chuckled and goes, "Yeah." And I was like, "There's got to be an easy way to fix this problem. It's just a communication problem." And he's an engineer by degree and very knowledgeable man, very smart. He's like, "Yeah." He said, "At some point, you just go, well, he'll come out here and charge me $150 and he'll do something to fix it." And I'm like, "Yeah." But it is. It's just I think we get a little lazy.
Yep.
Anthony, I think you have your hand up. Is that
Yeah.
Anthony?
Yeah, good morning, guys. Good
Good
morning.
How's it going,
morning.
Anthony?
Beautiful day in Chicago.
Awesome.
I just maybe you got your input, both of you guys. Um, what about investing in Japan and metals? In the metals, what do you guys think about that?
You know, I caught a snippet of Jeremy Graham's interview on forget what the name of the show is, but I'll figure it out. And he talked about the guy asked him, "Are you investing in U.S. equities?" He's like, "No." He goes, "I'm completely out." And he's like, "Well, where are you investing?" He said, "Foreign. There's better value elsewhere." Um, Japan may be one of those. I think it's worth taking a look at other countries. If you invest more of a sector rotation kind of, or like a more ETF approach, you could buy ETFs related to all different countries. But I think there's probably some value in some of these, areas. But also take into account Japan is as well potentially affected by the same things we're going to be affected by, or China's going to be affected by. So, I think it was JPM is the ETF maybe for Japan. Let me see if I can find it. No, it's JP Morgan.
JP
Uh,
Morgan.
um,
I think it's. mm, Is it
um,
EWJ?
EWJ. There it
Yep.
is.
Yep.
Let me share.
I have my cheat sheets.
There you go. So this is a chart of it. Let me just remove some of the funny lines. So when I look at it, if I go out to a weekly chart of it, That's what I'm seeing. Had a break above sort of its high here in February, back here last week, pulling back this week, but this may be a support area at this point.
Certainly
Um,
is.
if that holds, Japan could be an opportunity. It could see a move higher, but watch this volume
Yeah, what's the volume on that, Trent? Daily average?
daily. 4.85 million
Okay,
yesterday.
that's enough.
It's healthy. Yeah.
Yeah.
So if I go a year, that's a year trend of Japan. If I go 5 years, that's a trend of a 5 year trend. So we saw a move above the 200 back here in November of 23, big move. Came down in August 24, and then again April 25, and then it's just moved higher. So it's above my intermediate trend line, which in this case would be weekly. So it's moving higher. So maybe a pullback into this area. Maybe this holds that 15, the trade weekly trade trend line is moving higher. This could be a value opportunity. And your RSI is really reasonable, around 56, so it's above 50. So there's an potential opportunity there, Anthony. What was the
Mhm.
other one?
The metals, like are they? What do you think about investing in the metals? You know, like gold and silver and all that.
I think
Um,
I would wait a little bit. Last time I looked at the gold chart, I think it has room to continue down.
that's a weekly chart of gold
Yeah.
futures right now. So you're breaking below the intermediate or 62 week moving average. To me, that would be like Mark said. I just wait and see if it builds a support level that we've seen as basically it was resistance back here in September 25, then became is now
Did he
potentially support.
freeze?
So we hold there, we could move higher.
Yeah.
And then
The money, Angela, has moved. It's moved into a lot of the risk in the memory, and you can see that just by their charts and out of things like Bitcoin and gold and silver. You know, all the kind of assets like that. And we'll know when it's time for gold and silver. It'll turn back around on it, and you'll see money flow back in and out of the higher risk assets.
so this is just to give you an idea. This is a daily chart of silver futures. This once was resistance back here in October of 25, became support in December of 25. Or no, excuse me, that was October of 25, December of 25. Shot up like we saw back here into January, and then has come back down to support this. So it could be an opportunity. I think SLV is the way you could play it. So similar chart there, and yeah, you look at the options market. What it's below the bull bear fight line. So you take into account it's going to go. Market makers are going to buy or sell into the direction of it when it's below that bull bear fight line. But support at $50 looks like 2 days of accumulating there. You may have a third day, but it's a very low volume environment for it. As you can see, volume just really is thinned a lot in the SLV. Yet, a break above 57 and definitely above the 200. Once you're above the 200, you're structurally starting to create some more potential solid structure of the price movement. Whereas right now, that structure is fractured. And so it's luckily, in this case, the option market is priced in where what in October, what was resistance, and then in November, December became support is now that's where the option market is putting basically a floor on it. And I mean, speculative right now because it's below the 200, but it could be an opportunity and possibly a move into silver again. So take that. I mean, take it for
I
what it
think if it
is.
I think if it drops below that, you could go down to the 40 level.
Yeah. If you look at gold, I think gold is, you're right at what's interesting is the market makers have put, they've sold calls and at 170 looks like 176 or so, 75, and yet your bull bear fight line is right at the same level. So you're now in that bear level, but your support is at 360. So you're in a support level. So that is really, really tight right there. So that's something to keep an eye on. And the last 3 days, gold has moved higher, or GLD has moved higher. So if we could see a break above, I think this looks like 376 or so, 76 or so, which would be a break above that trade trend line. But more importantly, a break above the 200 in a support level, that is indicating now structurally we're building a good solid structure, whereas right now it's fractured. So keep that in mind. Right now it's more speculative, but we can see a move above, say, 375, 376. You could be on a move higher. But just keep an account we're in a fractured structure.
I think the trend is still down on that until it breaks, 382 or so. Yeah.
But look at that 200 as, if you're above the 200, you have some level of structural soundness. Below it, you have a fractured foundation. So just imagine that's your foundation of your house or your basement. Right now, that it's cracked and showing cracks. Could it mend itself? Sure. But right now, it's more speculative.
I see that the 50 is just about going to death cross the 200. That's never a good thing.
Yeah. So take both sides of it in account. So,
Yep.
Right now I look at it and I go, be patient and wait. You want solid structure under a stock. And you get that, and that's when company stocks move higher or have a foundation to move higher. But when they're below the 200, in my opinion, you got cracks in your basement. And
Yep.
the further they goes down from the 200, the bigger the cracks. So just also remember Jim Simon's approach to Renaissance Fund was reversion to the mean. And oftentimes we think of reversion to the mean from the top side down to the mean, but also it can mean the same thing from the mean can be, the stock can be lower than the mean, and you can revert back up to it. So that is also something to take into account. And that's why his average year was 60% after fees. So something to take into account as you're looking at these charts. So we can see a reversion back up to the mean. And I use the 200 as the mean. So.
Okay, thanks.
Hopefully that helps.
One more comment. I was listening to Kerry latest stock and the deep dive, and it's the insurance company. You know that what I'm talking about? X
Yes.
something.
Is it QXO or something like that?
No. It's the they deal with
Zeta?
insurance.
Yeah.
And maybe we can look at the chart.
Yeah.
XZO. Yeah.
Is it XZO?
I think
It's
it
not-
is.
Hold on,
The concern was that it's a great company making a lot of money, but the parent company has 80% control of it. Which, like Samantha was saying, it's like getting in the truck, being the passenger, and not able to control the radio.
Yeah. Yeah. That's an interesting analogy.
In other words, you have no choice in the matter. If the parent company wants to sell you, then forget it. It could do whatever it wants. But I'm wondering what your thought about that, what the chart looks like, and what do you guys think about it? Both of you guys.
So I looked at it from my point of view. You're talking the insurance industry. That right there is like the drug industry, or pharmaceutical industry. That's a hard one to crack. That's my first hiccup in it that I see. Is right now it's above my intermediate trend line, but it has been on a decline here recently. All right, so if I just draw a line like that, it's broken above that, but it's also up against some resistance right in this area. Honestly, I'd just wait. It's a new company. Went public back here in November, so it doesn't have a 200-day moving average yet. I mean, it's getting there. It doesn't, from what what's this here? Report wise, revenue is up 6%. So they're having revenue growth. Let's see here. They have positive earnings. I guess my challenge is is that it's in an industry that is a very has a big lobbying group. And that's why you would pay more for health insurance or any kind of insurance. And that to me is a roadblock. I don't know. To me right now, I'm not excited about it.
Okay. All right. Thank you. That's all I have. Thank you.
All right. Well, we'll wrap it up there unless there's more to discuss. Today is Friday, so Kerry will have his call at 3:00. So join him if you can. We'll see you then.
Nice.
What's that?
Great to hear he's gonna be back. And
yeah, should be a lot of talk about Samantha and the progress he's making with that, and who knows what else we'll get into. But we'll join us around 3:00 Central, 4 Eastern. And if we don't see you, have a great weekend. And
has that beta thing moved forward at all?
He'll explain more about it, but I was on a conference call with him and a developer yesterday, so I'll let him talk about it. This is his gig.
Right, but I think they were looking for some people to be part of it, and
he's got one,
and I just.
Yeah, he's I'll let him talk about it. It's his baby. It's his gig. So I'll let him talk about it at 3.
Are you talking about that people in the group can act as Samantha?
So he wants to turn Samantha into where you could enter a ticker and it will give the analysis, create the research paper, and if possible, eventually a podcast.
So you mean like putting it on the website of the best investors?
Sir, what'd you say?
Maybe like putting it on best investors.
Yeah, his vision is that it would sit on the website, but also he'd like to develop it into an app that could sit on your phone.
Okay, cool.
Yeah. So I'll let him talk about it. This is his thing. This is his company. It's his direction. So we'll I won't speak for him. So
I love Kerry. Next life, I want to be like him.
Yeah.
That means you'll have a son. You'll have a son named Trent then.
Make you laugh.
Trent.
I hope you guys have a great weekend.
Nice smile.
Angelo's not the only one.
What a way to speak volumes without saying the word.
Good model for everybody then.
Thanks a lot.
All right, thanks, guys. Thank you, Steve.
Good model for everybody.
You all take care. We'll see you at 3:00.
Live loud.
Live loud.
Live loud.
Great day.
Anthony, give me some money, eh?
Yeah, man.
Yeah.